Good afternoon to everybody, and thank you for coming here. Buon pomeriggio a tutti. My name is Corrado Paina. I'm the Executive Director of the Italian Chamber of Commerce of Ontario, Canada, ICO Canada. I would like to thank all of you for being here with us today to discuss the current economic situation and the new challenges Canadian companies are facing as the economy reopens slowly. Today, webinars hones in on some of the key areas, including an analysis of the current market and economic trends, rent inflation, and strong immigration. Many people are struggling to find jobs, yet business people in a number of sectors have difficulty recruiting workers. Also, in a post pandemic environment, the skills demanded in the wake of the crisis are not necessarily the same as before. Here with us today, we are proud to have such a great panel of experts. Before we get started, I would like to thank KPMG for having partnered with us in the organization of this webinar. KPMG is a Canadian leader in delivering audit, tax, and advisory services. KPMG responds to clients' complex business challenges across the GTA, throughout Canada, and around the world. Without further ado, I would like now to invite John Fabro, tax partner in charge at KPMG LLP, Enterprise and ICO Canada board member, to take over. Please, John.
Thank you very much, Corrado. Thank you for those kind words. And as Corrado said, I'm one of the executive directors of the Italian Chamber of Commerce and a longtime member. And as KPMG have been longtime members of the Italian Chamber, and I can attest to all the benefits that come with membership. So I really, at the end of today, I would really urge you to speak to Corrado, speak to the members of the ICCO team to understand what benefits you can obtain from being a member of the ICCO. So now I'm going to introduce Benjamin Tal. Benjamin Tal, he's a managing director and deputy chief economist at CIBC Capital Markets Inc. Benjamin is a member of the CIBC economic team that is responsible for analyzing macroeconomic developments and their implications for fixed income, equity, foreign exchange, and commodities markets. He has close to 20 years of experience in the private sector advising clients, industry leaders, corporate boards, trade associations, and governments on economic and financial issues. Welcome, Benjamin, and over to you.
Thank you very much. I hope you can hear me, I can see me. Listen, I have only 20 minutes to tell you everything I know about the situation. Some might say that maybe that's 19 minutes too much because, of course, nobody knows. It's all about COVID. So we have to discuss it. So in the next 20 minutes, we'll discuss this tug of war between the virus and the economy, who is going to win. Of course, we have to discuss the elephant in the room, inflation. How much sleep should we lose over inflation? You talk about inflation, you must discuss interest rates. They are starting to rise. How quickly, how fast, how high? We'll discuss. Clearly, we have to discuss the job market. We have people without jobs and jobs without people. Companies cannot find people. Wages are starting to rise. What does it mean? And if we have time, we'll talk about this crazy housing market and how sustainable it is. But first, of course, let's start with COVID and the tug of war between the virus and the economy. And I remember about a year ago, January of 2021, I was trying to find an image that captured the mood in the economy, the mood in society. That was a year ago. And what I found was this: light at the end of another tunnel. We moved from 20 to 21. We were talking about the vaccine. We were starting to get vaccinated. Things look good. We were talking about this light at the end of the tunnel. A year from then, namely now, I was looking, searching for another image that will capture the current mood today. And what I came up with is this. Basically the same. we see another tunnel, another light, and we are talking about the end of the tunnel, and more light is coming. We'll see. Clearly, we are getting better. The offense is getting more sophisticated, but our defense is getting even better, and that's more or less where we are. So clearly, there is no way of knowing where we are going. This is the year of the tiger, the most unpredictable creature out there. But I suggest that actually, if you make some reasonable assumptions about COVID, the trajectory, the economic trajectory of 2022 is relatively predictable. I think that the winter is tough, as we all know, economically speaking. The spring will be fine, and the summer will be on fire, the way we have seen in previous years. And then the fourth quarter, the first quarter of 2023 will be a bit tricky, because we really don't know what will be the situation when it comes to COVID. And if you think that you cannot get a straightforward answer from an economist, try a virologist. They also don't know. But what I do know is that things are moving. Now, remember this number? Go back to geometry, grade 7. That's pi. Now, why pi is important? Because pi is the next Greek letter after Omicron. What I mean by that is that maybe by the end of this madness, we are all going to be fluent in Greek. There will be another variant. There is no question about it. The question is to what extent 2022 will be a transition year from a pandemic to an endemic. And some people are saying that we are already there. If not, we are getting there. Namely, the virus is not dead. There will be another variant. But as a society, we will learn to live with the virus in a way that is consistent with an endemic situation, and therefore the economy will be able to function. It will be a zigzaggy type of trajectory, because the summer will be great, and then the winter, next winter, will not be so great. So economic activity will be volatile, but the trajectory is going to be, I believe, a bit predictable. Given this, clearly what counts when it comes to economic policy regarding the virus and how much you are closing the economy, it is basically a function of not number of cases, because everybody knows somebody with COVID. It's about hospitalization rate, as you know. And here we have a bit of a disadvantage, because Canada has the lowest level of spare capacity in the healthcare system, the lowest in the OECD, with the exception of Mexico, which means that we reach capacity much faster than any other country. Therefore, we have to impose restrictions faster than any other country. And that's something that is really restricting our ability to grow. And that's one of the most important reasons why the US, economically speaking, outperformed Canada since the beginning of this crisis. Another factor is this chart, which is the fear factor, which is starting to happen now. What I mean by that, look at the UK and Germany. The UK is basically open, Germany not so much. Look at restaurants, basically the same. Namely, the restaurant is open, people are not showing up. Why? Because of the fear factor. I suggest we are starting to see it a bit in Canada. We are opening up, but not everybody will be going. People will think twice before they go to a basketball game or a restaurant or even the gym. So the fear factor will be there, and I suggest that it will diminish with the temperatures. As the temperatures start rising, I think that the fear factor will diminish, and that will be very good for a strong economic activity in the spring and especially the summer months. That's basically the tug of war that I'm seeing, relatively predictable, but the COVID situation is still there, a transition year happening now. Now, this is COVID. Now, let's talk about the elephant in the room, and that's inflation. And of course, if you are under the age of 30, you don't know how to spell the word inflation, but it does exist. We're talking about a 30-year high inflation rate. You know the story, so I won't get too much into it. The question is how sustainable it is, how real it is. So let's discuss some of the forces and see what makes sense and what doesn't. First of all, it's money. Talk about cash. We are talking about a situation in which this has been by far the most asymmetrical crisis in history, in which many people, their income was untouched. Their spending went down, therefore their savings went up dramatically. You look at the chart here and you look at the red line, That's the excess savings that people have. This is $300 billion of excess savings, and about $90 billion of it is basically sitting in checking and savings account looking for direction. And I remember when we discussed it with the finance minister, she said, how can we convince people to spend that money? And I said, provide the vaccine and get out of the way. They don't need any motivation. They will spend the money. And that's exactly what we're starting to see now. Very, very important. And we'll discuss where this money will be going in a second. But before that, I really would like to discuss this, which is the number one factor impacting inflation at this point. This is about 70% of inflation as we see it at this point, supply chain. You all know about that, but I will make the point that the supply chain story is 100% COVID. Remove COVID out of the equation and you don't have the supply chain story. Now, first of all, this supply chain business is all about demand. What I mean by that, look at the left of the chart. Look at the left chart here. 2021, that's the increase in goods consumption, goods, not services, goods. It's like 4 times a normal year. So you squeezed 4 years of consumption into 1 year. Just to put it in perspective, this increase in consumption is equivalent to a situation in which overnight, you parachuted 75 million new Americans into the US. 75 million. And the minute they landed, they started to spend. That's what we are talking about. This is a demand shock. And even a normally functioning supply system will not be able to handle, to deal with this demand shock. And this is, of course, not a normally functioning supply system. It's very sick. So you have a sick supply system trying to deal with the demand shock. That's the number one reason why prices are rising. We all know the story. But it's all about COVID. The minute COVID is over, and let's assume and pray that by this time next year it will not be a major issue, then you don't have the supply chain story. People say, yes, never underestimate the American consumer, but give me a break. How much stuff do you need? We bought everything we wanted. How many exercise bikes do you need? Because it's easy. You press a button and you get it. I suggest a lot of this money that we are talking about, the excess cash that we are talking about, will be shifting to services. Now, services will be there, they will open, but they are not as inflationary. Why? Because in services, you don't have supply chain. It's much easier to start a new restaurant than to establish a new manufacturing facility. Therefore, the minute prices rise, you will see more supply of services coming to the system, and that will keep prices relatively muted. That's the idea. So you will see a lot of money, all those billions of dollars, being switched from goods to services, and the service inflation aspect will not be as bad because you don't have supply chain. So I believe that yes, over the next few months, over the next even 6 months, you will see supply chain dominating inflation. The numbers will be in the sky and the newspapers will go crazy. At the same time, you have a situation in which overall activity will start soften when it comes to COVID-related difficulties, and that's something that will open the gate for services as opposed to goods, and that's less inflationary. I think that's very, very important to understand, and that's more or less where we are. So I don't see supply chain being a lasting impact on inflation, but it will be with us for the next 6 months. Very, very quickly, let's go to some other inflationary forces that I believe are more sustainable. One of them is rent. I won't get too much into it, but you see the chart to the left. Home prices went to the sky. Rent did not. We have something called the home price to rent ratio. This ratio during COVID went to the sky. And just to put things in perspective, in the US, in order to bring it back to where it was, you will need to see rent rising by 37% over the next 2 years. I'm not saying it will happen, but clearly rent will be an inflationary force. And if you look at inflation numbers in Canada and the US, you can see that housing was a major factor. That includes definitely rent that I believe will continue to be there. So if you are into multi-residential investment, rent, I believe, will rise. that will support valuations in this asset class. Another factor that is more sustainable than the supply chain is the labor market. And here we see a significant difference between Canada and the US. In the US, we have seen a significant exit of people over the age of 55 from the labor market. And I suggest that if you are like 65, 68, 70, and you decided to exit the market during COVID, you're not coming back. In Canada, the opposite is the case. People are staying longer. So there in the US, they are leaving the market. In Canada, they are staying in the market. Another force of supply of labor that Canada has that the US is actually losing. Another factor is the quit rate. You see a situation in which people are quitting in the US at a rate that we haven't seen before. The great resignation trend that people are talking about. This is very important to understand. In Canada, the opposite is the case. So far, people are not resigning, quitting in Canada. In the US, the quit rate is at a record high. Granted, in a recent public opinion poll, a record high number of Canadians said that they are thinking about quitting. So in the US, they are quitting. In Canada, we are thinking about quitting. That's very Canadian. Nevertheless, it means that we have more supply of labor relative to the US. And then the most important factor is immigration. In the sky, a year ago, the government of Canada announced that they would like to see no less than 400,000 new immigrants in 2021. And people said, are you crazy? How are you going to get 400,000 during COVID when nobody's flying? Guess what? We got 401,000 new immigrants in 2021. And relative to the US, as you can see from the chart to the right, this is much more. In the US, they got 500,000, we got 400, but the last time I checked, we're still 10 times smaller than the US, which means that this is a very significant factor. Now, how is it possible to get 400,000 new immigrants when there is COVID? And the reason is that 70% of new Canadians in 2021 and 2020 arrived to Canada from Canada. They were already in Canada. They were non-permanent residents. They were students. For them, it was a change in status, not a change of address. That's very important to understand. And I'm a member of the committee advising the Prime Minister about immigration. And I can tell you that more and more new immigrants will be arriving from Canada. This means that they are younger, they are more educated, they speak the language, they have, as you can see in the chart, under the Canadian experience category, which means that they have job experience with major implications for their contribution to the economy. That's very, very important. This chart, by the way, just as a really, by the way, is illustrating the alignment between the jobs that they are holding and what jobs the economy needs. Basically, to see to what extent the skill set of new immigrants is in line with what the economy needs. And you can see that there is relatively positive correlation, which means that there is some alignment, but not there are some exceptions. One of them, big, is trades, construction. The number one issue in the labor market, in the housing market that I believe is impacting prices. The number one issue is supply. And the number one factor impacting supply is trades and construction workers. As you know, ask any developer, they will tell you, I cannot find people. How many new immigrants we got from abroad in trades, in construction? Basically almost zero. So we need better fine-tuning here. We need more of them in places that we need. Same goes for healthcare, by the way. We need more nurses. We are not getting them. So we can fix the situation, but more or less, you can see that there is some sort of alignment, and that's actually very, very important. So you have a situation in which in Canada, we have more labor supply. We have more immigrants coming. And that's the number one reason why wages in Canada, although rising, are not rising as fast as in the US. Because in the US, the labor market is tighter because older people are living. In Canada, they are not living. And then you have a situation in which clearly the new immigrants in Canada are putting a cap on wages because we have more supply of labor. In this environment, you have inflation in the US rising faster. You have wages rising faster. Their labor supply is not there. You will expect, interest rates in the US to rise much faster than in Canada to actually fix the situation. And what we find is the opposite. In fact, the market is now pricing in a situation in which the Bank of Canada will be raising interest rates faster and higher than the Fed. And I think that's nonsense. I think that there is no reason for the Bank of Canada to move quickly and basically ahead of the Fed, given the fact that their inflation is higher, their wages are rising faster. There is no need to raise interest rates faster in Canada. We have to go alongside with the Fed, and I believe this is major mispricing by the market, and that will be fixed. But important here that interest rates are rising. And when I meet with the Bank of Canada, and I meet with the Bank of Canada very often, I said, be careful. Start raising interest rates. In fact, I wanted them to start in January, but go baby steps. Don't kill the market. Every economic recession, every housing market crash was helped, if not caused, by monetary policy error in which central banks raise interest rates way too quickly and basically kill the economy. When you are chasing inflation, you are chasing a lagging indicator. And I suggest that if they move slowly, the economy can take it. If they move too quickly, they can derail the economy. And the number one variable to focus on will be inflation, but not now, not even in the next few months. It will be accelerating. But if inflation does not ease in the second half of the year, namely in September, October, if you don't see inflation easing, then the risk of the Bank of Canada and the Fed raising too quickly is going to rise. And that's something that can put the economy at risk, something to focus on. At this point, it seems that the Bank of Canada and the Fed are getting the picture, but they're all human and they can make mistakes, and it happened in the past. However, one thing that we have to take into account is that corporate Canada, companies, you are not going to sit and just watch things happening. You're going to react to what's happening in the economy. You're going to react to the fact that you cannot find labor. You're going to react to the fact that labor is becoming more expensive and less available. So what we are seeing is something like that. Look at this. This is margins, profit margins in the economy. And you can see that there has been a structural change after 2000 with profit margins rising. And we know exactly why. One is deglobalization, just-in-time inventories. Labor was available and cheap, and therefore companies were maximizing labor as opposed to investing in capital. And that's something that we have seen. Another factor is that a lot of companies, big companies, have more pricing power. Over time, you can see that more companies are controlling a larger share of the economy, and therefore their pricing power went up. And clearly, as I suggested, labor was cheap. The chart to the right is showing you the share of low-paying jobs in employment. It has been rising over time. Employment compensation as a share of output going down. Labor did not have the profit margins. All this is changing. Deglobalization started before the crisis with Trump and is accelerating now. It doesn't mean that deglobalization is dead, but I assume that about 20% of what the US is buying from China will come back home with major implications for Canada. If you wake up one morning and you realize that 90% of your antibiotic supply is coming from China, something is going to change. Same goes with semiconductors. You know the story. So that's one thing. Clearly, COVID exposed the just-in-time inventory story, and we are moving from just-in-time to just-in-case inventories. It means that inventory level will be rising. Labor is now with the bargaining power. Labor has the power. Wages are rising, so companies will start doing something else. They will start investing. Look at what happened in the 1990s. Wages went up. Inflation didn't. Why? Because productivity went up dramatically. Why productivity went up dramatically? Because they realized that investment in capital is important, and that was the internet revolution, and we're starting to see early signs of that. Labor is becoming expensive. The chart to the left, the chart to the right is telling you that companies are starting to substitute labor for capital, investing in capital, and that will lift productivity, and they have the cash to do so. If you think that individuals have money, look at companies. They're sitting on $130 billion of excess cash. This money will go to buy back stocks, to raise dividends, but also to increase investment. So the hope and the prayer is that companies for the first time after 2 decades will start really investing because A, they have the cash, and B, they have the motivation because labor is too expensive and you need to increase productivity in order to maintain your profit margins. So that's the story. So overall, to sum up, I suggest 2022, economically speaking, is relatively predictable if you make some reasonable assumptions about COVID and 2022 being a transition year from a pandemic to an endemic. I believe that inflation will be with us for the next 6-8 months, but I think that a lot of it has to do with supply chain. You remove supply chain from the story if COVID improves, and you stay with only wages and rent inflation that is going to be better, higher than expected, but higher interest rates will deal with it. Higher interest rates are coming, but I don't buy the notion that the Bank of Canada will have to raise interest rates faster and higher than the Fed. There is no reason to do so. Also, there is no reason to go too fast, as we have seen in the past, because that will derail the economy. And that's the risk that the economy is facing if inflation is not going to ease in the second half of the year. Clearly, corporations will modify their way of looking at the situation, and you will see more capital at the expense of labor because labor is not very available. To sum up, I will say that the key question is to what extent COVID is an event or a condition. And we know that a lot of trends have been accelerated during COVID, but economically speaking, the ability of the economy to grow, I believe it's still an event, not a condition. We will do things differently, but the potential growth of the economy will not change because of COVID. So yes, the global economy is being transformed, but when the fog clears, everything will look very, very familiar. I will stop here. I'll go back to you. Thank you.
Thank you very much, Mr. Blatt. Thank you. Well, your presentation was like all intelligent presentation, there's always an element that can be called disturbing because, as you can understand, we're living an exceptional condition. I wonder if this exceptional condition is actually not so exceptional. I see some similarities. 1970, Trudeau's father, the War Measure Act, 1990, the Oka standoff, the trackers the other day. And I really wonder, where are we going? And if you ask me, COVID is an event or a condition, could I reply saying COVID is a state of mind?
That's a very good question. I think that if you ask me what COVID exposed, it exposed the number one factor, the number one issue that is facing our society, which I believe is a major issue, and that's the income gap and the wealth gap. And it's a reflection. Everything is a reflection of that. What you see with the trackers, what you see everywhere in the US is a reflection of that. And we basically have been living in this environment in which the income gap and the wealth gap has been widening and widening and widening. And that creates this kind of uncertainty and sometimes chaotic situation. And COVID exposed that. As I suggested, this has been the most asymmetrical crisis in Canadian history. All the jobs, not some, all the jobs that were lost were low-paying jobs. In fact, high-paying jobs, their number went up. All the billions of dollars that I'm talking about in checking account, they are sitting with the mid to high income people, not with low income people. There is another factor, the housing market. People say, how is it possible that people can afford those crazy houses, crazy markets and prices? One third of home buyers, are getting a gift from their family. And this gift is significant, hundreds of thousands of dollars. People who are renting or people who are in low income cannot help their kids. So their kids will not get into the housing market. So the wealth gap is widening. And by the way, this is not just about uneducated people that cannot spell their name. Canada is the most educated country in the OECD in terms of the number of people going to universities. But we're also the number one country in terms of the number of educated people that live in poverty. So it's beyond that, it's education. I've been talking about it for a long time. You are absolutely right. This is just a reflection of a much bigger problem. And I suggest that if we don't fix it, look what's happening in the US. It's all about income gap. It's all about income gap. If we don't fix it, if we don't do things to narrow it, we will have civil unrest. And we have seen something like that with the truckers in Ottawa.
Can Canada offer today still the right climate, the right place for foreign investment?
My answer is yes. My answer is yes, but we have to work very hard to attract. First of all, my concern is before foreign investment to attract immigrants. We assume that they are lining up, but they are not lining up. Why? Because the standard of living in Mexico, India, China is rising. And we are welcoming them with unaffordable housing and a 54% marginal tax rate. I'm saying at one point, they will not come. They will go somewhere else or they will stay home. So we have to find a way to attract them. Same goes for foreign investment. When it comes to taxation, we have to make sure that foreign investment is extremely welcome. And it's not very clear that it's there. So we have a lot of work to do in order to improve those two fronts.
Thank you. I would like to present the other panelists that are here today because I think it would be great if we could expand the conversation. Such an exciting, really an exciting presentation, and congratulations, really. With us today, we have Joseph Balsamo, Senior Wealth Advisor, Portfolio Manager at CIBC Wood Gandhi, CIBC Private Wealth Management, and Eco Canada board member. Also with us, as you know, John Fabro, KPMG, and Gualtiero Guadagni, CEO, Bionic Power Inc. Let's go from the very beginning. Let's go to what we just heard. What is your biggest fear? Do you have any fear about this return to normality, or pseudo return to normality?
Maybe I'll step out first amongst us, but I think maybe the biggest fear is not knowing what is that normality. What is that? What should that look like? You know, and Benjamin, you talked a lot about once COVID is gone, and things like that. But are there really possibly fundamental shifts, either in the economy, the way business is transacted, or things like that, that are going to change on a permanent basis? I'm not sure what your view is on that. If they're, where.
Yeah, let me address that, because that's basically going back to the question to what extent it's an event or a condition. Every crisis is a trend accelerator, and this crisis definitely accelerated a lot of trends. E-commerce, e-health, e-education, deglobalization, a lot of things that started were accelerated significantly during COVID. Clearly, after this madness is over, to the extent that it's over, and again, maybe it will not completely be over, but we will learn to live with it, the way we do business will be different. E-commerce will be very, very common. E-health, there will be more money. I see a permanent increase in government spending in the economy because we're talking about a modified EI system. We're talking about national daycare system. We're talking about more money going to health. That's something that will lead to higher taxes, by the way, down the road. So I think everything that we do will be very different following COVID. But will it change the output? Will it change the ability of the economy to grow? This I'm not so sure. We'll do it differently, but the outcome of it will be basically the same. So in this sense, when it comes to the trajectory of the economy, I don't see it as a condition like in 2008, when the financial crisis led to a structural decline in the ability of the economy to grow. I think that we'll do things differently, but the outcome will be basically the same. That's the way I see it.
For instance, as a businessman, Gualtiero, what is your main fear?
One of the fear is the big change and swift in the workforce and in the expectation of your workforce. So we have started in COVID the whole concept of working remotely and working from home, as every company and every business and every angle of the world could have the possibility to do that. Really, this is something for commerce, financial activities, and a lot of services, but in many cases you cannot. So it comes down to the difficulties of finding workforce. I can give you a personal example. The personal example is we were looking for software engineers. Software engineers, there are companies in which software engineers are people that can easily work from home, and they are looking for people, and it's a fantastic opportunity. There are companies like ours that makes in which software is related to a very particular hardware, in which they have to be on site, and people, if they have the possibility to stay to work from home, they may not want to come and accept the work that is on site. So something is changing and will be a definitive change, like the way you sell medical devices, the way you promote them, the way you train people. There is, and in all those activities, all the company will be getting an advantage from saving money and saving time of useless travel. But there are situations in which this is not the case, and that impact on your ability to find people.
Yeah, absolutely.
May I infer that your sector was a privileged one?
What do you mean by privilege? During COVID, before COVID?
Meaning that COVID actually create the condition for more interest. I just follow what the newspapers say. The health
Yes, if you were in the business of creating COVID test, personal protection, or vaccine, for sure. If you were in the business of promoting medical devices for standard use, if you go and check the balance sheet of not of startup company like mine, but of big company in the medical device sector, the postponement of non-crucial operation, the postponement of non-necessary surgery have been a disaster for a lot of companies. And I mean, a whole class of labor is going to disappear. Sales reps, they were basing their professional life on meet and greets with people, with the healthcare providers. That's all done by phone. In a while, people will discover that what was done by 10 people can be done by 2 now.
And if I may, that's clearly the issue regarding education, what I started to discuss. Quite frankly, I think that as a society, we are failing young Canadians. We are failing them. The labor market is changing at the speed of light, as was just discussed. And the education system is behaving like nothing happened. We are failing young Canadians because it was much easier 20 years ago to find something, even if you were a high school dropout or even if you had a BA in philosophy. Today, it's not so clear that you will be able to find something. You need something practical. So we have to rethink education. You look at the dual system in Germany, where you can have a BA in history and minor in plumbing. Here, it's a joke, but there, that's the way it is. Something that we have to think about. Basically, we have to break the negative stigma associated with colleges. We have to advance trade and increase funding for high-tech education.
Joseph, your sector, right? What did you go through? What were the big changes? how did the industry change to the point that you might have trouble to not recognize it when you will start, again, that kind of normality?
Well, I think it's interesting because client mindset has shifted a bit in terms of simple in-person transactions. Clients are happy to do it virtually. They don't really need to come in anymore. So they're comfortable with that. But what I'm seeing is shifting with my clients is, and Ben pointed it out, they're helping their children with house purchases because the fear is they can't afford it on their own. So the wealth transfer is accelerating. So that is a big shift I'm seeing in my industry where traditionally, the parents would pass away, the next generation inherits the assets. Now you have parents passing on assets while they're alive because they want to see their kids benefit now. But it's really a question of, can they afford it? Can they help them now? And they're working longer, not because they can't afford it, because they want to work and help their children a bit longer too. So it's a very interesting mind shift that I've seen with certain clientele and business owners as well. They're not retiring like they once were. They enjoy their work, they continue because it's part of their purpose. Also, they haven't been able to travel for 2 years. And normally these clients do like to travel, so they work instead. But I think there'll be pent up demand for services, as Benjamin mentioned, coming out of this. But definitely there's been some great shifts within my industry in terms of the investor mindset.
Do you find people willing to buy? Do they lend you here, or your clients at this moment are seriously lacking confidence?
I think there's a definite lack in confidence. When you look at what's happening out there, in Ottawa or globally, you're talking the Russia-Ukraine issue. There's sentiment studies that are coming out. Investor sentiment is at lows that even before other crises never hit. So it's very interesting to see the investor psychology is quite pessimistic. But I also think it's a buildup of many factors, being locked up for 2 years, not being able to have a purpose-driven life where people haven't seen each other in a while. So there's a lot of negativity and pessimism built up. So the optimist in me says, once doors open a bit, there's going to be a huge pent-up demand and things will loosen up a bit. The psychology will change. But right now it is heavy, I have to say.
I had no chance to travel much, Mr. Tal, in these days, but I want to ask you a question. When you go to United States, you find a different attitude. When you go to Europe, you find a different attitude. Canada starts to be seen as a paranoid country. What do you think, honestly?
That's a tough one. I really don't know, but clearly what happens with the trackers is not helping our reputation globally in terms of Canada, the polite society. Clearly in terms of a reliable source of materials, I hope this did not damage our reputation too much. My issue is not about closing the bridge for 2 minutes. It's about the long-term impact on our reputation as a reliable source. Regarding our policy, I think that our policy is a reflection of one thing, and that goes back to the case count and hospitalization rate and our low capacity. For a given level of hospitalization, Canada was much more restricted than any other country. It's not because we are crazy, it's because of the fact that we don't have the capacity in the healthcare system to deal with it. And we reach capacity overnight. We usually operate at 97%. 97%. Any other country in the OECD, 85%. So and that's without COVID. You reach capacity overnight. If this is not a wake-up call to inject more money into healthcare, I don't know what it is.
I'd like to hear from you guys if you can reply to my question if you're. Okay, let's go to the next one. I just had a question. I'm very, very interested in knowing how much did we lose in these days with the standoff with the trackers? What was the daily loss?
Again, I don't know, but I don't think should be the measure. The measure is not the daily cost of transaction. The measure should be the long-term reputational risk that we are facing. To me, that's the way to look at it. And I think there is a damage. I hope it's not long-lasting.
You think can we talk 1 second about the decision of the Prime Minister? He found some premiers in favor and some premiers not. The state of emergency. Is this the way to proceed in the future? Because
Well,
it is an economic question at the end, right?
yeah, I think it's much more than economic question. It's about
Yes,
many other
absolutely.
issues. And I think that what we have seen in Ottawa was something that should have dealt with. The way the Prime Minister dealt with it, I will not comment here, but I suggest that clearly it was something that was unsustainable.
Does anyone want to comment on the decision of the Prime Minister on the state of emergency?
Well, I think it's interesting because I myself have received, communication from overseas from friends and family and clients sourcing news stories of what's happening in Canada. And that usually never happens. We're usually the sleepy country that nobody really pays attention to. But all of a sudden, people are paying attention, and, it's building up other factions across the world too, it's sad. But certainly, I think our reputation has been damaged. So I do wonder if that will impact us economically down the road, or as humans, we have short memory spans, so we just move on once things get better.
In my view, like one of my observations was to say, I mean, the United States is such a, it's our largest trade partner. And to me, I think it will fuel and accelerate more of, bring things back home, So in other words, where the Americans are going to say, well, no, we're not going to risk not being able to get our parts, our components, or things like that out of Canada. We need to bring that manufacturing, bring that component work back into our country, back into the United States. So I just feel that I think, what's transpired is just going to accelerate that. If we don't, and maybe we needed to react a lot quicker and deal with the situation. I'm not sure what that solution would have been, but to deal with the situation, probably a lot.
And this point that you're making is extremely important. And if we put it in context, it's actually more important than in the past. Because let's face it, we are in the midst of a Cold War. A technology Cold War, but basically a Cold War, you might say actually in two fronts, not one front, Russia and China. Now, in a Cold War, as a third party, you have to choose a side. We know where we are, of course. By the way, if you're Australia, that all your security needs are coming from the US and all your economic needs are coming from China, good luck with that. But we know where we are. That's very different than before Trump, where the trend was to diversify our export engine away from the US. And during Trump. Now, the opposite is the case. Because you have to make sure that your partner is in the right side, which means that our reliance on the US will grow over the next few years. That's why this Buy North America business is crucial as opposed to Buy America. And I think that we are in a very crucial point in time in which we must find a way to integrate ourselves more into the US economy, not less. And believe me, that business with the truckers is not helping this cause.
I have several questions from the public. I'm just going to shoot 2 or 3 just for your information. They're all very quick. Is there a word, according to you, that can reflect the economy in 2022?
Yeah, my word is transition from a pandemic to endemic. I think that's the prayer, at least.
Joseph?
Yeah, I agree with Tal. It's definitely transition.
John?
I'll add to that cautious optimism. How's that?
And let's add to it also inflation, yeah, just for fun.
Yes.
For fun.
What do you say, Gualtier?
I'm with the transition concept, and also with the uncertainty due to all the overall non-COVID conditions, like the Cold War.
Tal mentioned inflation. I have a couple of questions on inflation. What are your thoughts on inflation 1 year from now?
Let's put it this way. Today, inflation is about 5%, 5.5%. It might go to 6, 7% over the next few months, and the media will be all over it. If it's not about 3% a year from now, on its way down, we are going to have a recession in 2024. That's my answer. So our call is that it will be on its way down, maybe 3%, down from current 5%, with most of it coming from wages as opposed to supply chain. If I'm wrong on this, and inflation will not ease, then you will see central bankers raising interest rates even more and more and more, that eventually will lead to a recession.
Will it be a recession like the one in the 90s?
It will be something along the line of the 90s in terms of the cause of the recession. It doesn't mean that it will be as severe as the 1990s, but it will be a monetary policy triggered recession, basically overshooting. But doesn't mean that it will be a 91 recession. But again, this is not the main case scenario. This is a risk scenario that we have to think about.
How do you feel, guys, about the recession? Do you have the same idea? You think, is this the number one issue today in Canada?
For me, I can't say that clients are thinking about recession. My business owner clients go back to the issues of either inflation, their input costs are rising, so they're managing that. Or on the other side, as Benjamin mentioned, is the employment factor. They can't find people. So a recession happens, but I think, it's too early to talk about that.
Does anyone want to comment on that?
I think that I'm pretty much aligned with Joseph. I mean, for us, if I have to see the nightmare that I'm facing is finding the right labor, making sure that I can buy the right parts, and there's not a backlog of a year or two on the parts we need. And we're not talking about low income, low level labor. We are talking about highly educated engineer to work in a technological startup.
Are we going to the supermarket and we're not going to find food eventually? You hear, the funny thing about this situation, and it's funny, I had not the displeasure to go through 2003, the SARS, which was a phenomenon that was really limited to China and Canada and not to other countries. But every time that I was going to Italy, I was, inspected, I was examined, and so on. It doesn't look like we learned a lot, in those years. In fact, Canada gave the impression of not being up to the job at the very beginning. But, because Tal said we have to live with the virus. So the virus is not going away. The virus is going to stay with us. And the virus is going to affect the economy. And the new economy could be an economy that brings to a recession. Am I going too far?
At the end of the day, nobody knows. Because again, we can have another variant. It can be more significant than the Omicron. Nobody knows. So we can pretend that we know, but we don't know. A reasonable scenario when you talk to all the people in the field is that, yes, the virus will be with us. It might be seasonal. It might be more visible in the winter. Will it impact the economy? Yes, but every year that passes, it will impact the economy less and less and less. And at one point, it will be with us, but it will not be felt in a very significant way, especially given advance in medicine that will deal with it. So I don't think this is a long-term story, but there is an adjustment process here. Again, I think that when you are in a situation, you cannot see out of this situation, and we are in a situation. But I think that a year or 2 years from now, things will look very, very different, and things will say, "Oh, the dark days of COVID, it's bad, it's over." So I think that's more or less where we're going. Again, going with the supply chain story. The supply chain story is not permanent. It's 100% COVID. You remove COVID out of it, supply chain will be back. There's no reason to believe that it won't. So again, when you're in a situation, you cannot see out of it, but we should do that.
On the contrary of the trackers, I guess you're a strong believer in the power of immigration.
Absolutely, absolutely. I think that this country needs immigration, and without immigration, our ability to grow will be very, very compromised. In terms of policy, I think that we are ahead of the OECD in terms of immigration inflow, and I believe it's a good thing, but we have to make sure that there is a very good match between what we need and what they bring with them. We need to make sure that you don't have a PhD new immigrants driving a taxi. We need to supply the high-tech people that we need, but we also need construction workers. We need both.
And this is essential, as you know, because so many people came here without really much school, but incredible passion, incredible strength. So I agree with you. I think none of us has an issue with the fact that immigration should be taken for different sectors and at different levels, I would say. We're almost at the end, and I have 5, 6 questions from the public and a couple of questions for all of you. But I just would like to know your interpretation, how you prepare yourself to live with the virus, economically and socially speaking. Can I start with you, Tertal?
Yes, I really don't know. I don't know. You cannot predict these kind of things because we have never gone through anything like that. So I cannot tell you what I will be doing. The hope is that, and I think we are going this direction eventually, might take longer than expected, that COVID will be like the flu. You live with it. And society accepts that the way it is with the cost. And it will be in the background and it will not dominate the way we live. I think that's the direction we are going to.
Thank you. Joseph.
Yeah, I look at it, there's going to be risks and rewards. Kind of like making an investment decision. The COVID decision is the same thing. I think we're going to have to live with it, and we're going to have to take some risks to get our rewards. But I do think the rewards are out there. We just have to come to terms with it. It's going to take some time, but I am optimistic.
John?
I would say I have to say being the conservative accountant, I think we're going to spend a lot more time planning. So in other words, maybe before we said, well, we need this job done, we need this work, we need these products or something, we're going to say, well, immediately we know where we're going to get it, we know where it's going to come, we know how to make it and things like that. Now we're going to pause and say, well, hold on a minute. What if COVID starts to spike up again? We have what's our pivot? What is our pivot going to look like? Because we need to secure and offset that potential supply chain risk. So I see us doing a lot more and see businesses doing a lot more contingency planning, and just to make sure that so that their business can run smooth and with more predictability.
Gualtiero.
On a personal life perspective, I'm full on with Benjamin and Joseph. I mean, at this point, I'm among the one that consider that this is like a flu, and with vaccination, with testing, with contact tracing, we have the Omicron variant make me knowing a lot of people that got COVID, including myself and my wife, but was like a normal seasonal flu, no more than that. So I'm positive on that perspective. I agree with John on the planning side for businesses, because really everything you plan, and I'm not just talking about logistics, but in clinical trials and clinical evaluation, everything that is not COVID, as soon as you have a spike in the hospital, a surge in the hospital situation, everything is postponed ad libitum without possibility of planning, and this impact on your what you promise to your shareholders, what you promise to your stakeholders in general. And so that will remain and will be a long way to be free of that.
Thank you very much, Benjamin Tal, Managing Director, Deputy Chief Economist at CIBC Capital Marketing. Thank you very much for your incredible presentation. Extremely interesting, extremely challenging, I would say. I will use this word. Thank you, John Fabro, Tax Partner in Charge at KPMG LLP Enterprise, Eco Canada Board Member. Thank you very much, John, for your support and for the sponsorship of KPMG. Obviously, Joseph Balsamo, Senior Wealth Advisor, Portfolio Manager, Balsamo Financial Group, CIBC Burigandi, CIBC Private Wealth Management, and Eco Canada Board Member. Thank you very much. All your insights were extremely appreciated. Valtiero Guadagni, you carry really a big burden. You are the guy, that has to help a lot to change this economy. And I guess, you have a big fight in front of you. Valtiero Guadagni, CEO, Bionic Power. Thank you to all of you. I think if I have to say, I just used the word by Benjamin Tal. This is the year of the tiger. We got to be tigers here. We have to ride the tiger, and we have to be strong. I don't see any other possible reaction if not, being aggressive tiger. I cannot think about tigers that are not aggressive. With those words, I want to really say hi to all of you. Thank all the staff at the Eco Chamber that made possible this event. Ilaria, Marisa, Mary, Monica, get acquainted with these names. They're amazing people. Tiziana, Richard, Astrid, all of these people have been working hard. They keep working hard, COVID or not COVID. And finally, I really invite you to become a member of the Chamber. It is a great network, and we're doing interesting things day after day, more and more. Come over, come on, try and give me a call if you're interested. And again, thank you for everything. Have a good night. Bye-bye.
Bye.
Bye. Thank you.
Thank you, Corrado. Thank you,
Thank you very
Benjamin.
much. Bye-bye. All the best.
Have a good day.